Hi everyone, this is your latest addition to the Hub webinar series, and can you believe it? This is episode 31, which means, guys, you have access to 31 different experts within this community and 31 hours of webinar content to help you move your business forward. So we are very grateful for the experts that come into this community every month to share value with our members and also sit within the community for the next 30 days. Our expert today is Lindsay, so there will be access to Lindsay through our YouTube channel, which is Ask Zoe 01 if you haven't subscribed to that yet, or you can reach out to myself and I will put you in touch with Lindsay over on LinkedIn, as well, as that's predominantly where Lindsay sits in terms of her social media platform and network. So Lindsay, without further ado, do you just want to introduce yourself to our members and listeners and what we'll be talking about today?
Yeah, thank you, Zoe. So my name is Lindsay from LW Accounting and Business Services, and I am a full service accountant based in South Yorkshire, but I do cover the whole of the UK, Scotland and Wales included. And as I say, full service accountant, so everything you would be expecting an accountant to do from compliance, but where I sit more aligned with my clients is looking more in depth at those numbers, so putting flesh on those bones, which is why Zoe's asked me here today from a planning and a forecasting perspective.
Thank you. And the reason we discuss these topics, guys, is because, yes, it is the start of the next financial year if you run your accounts April to March, but also as well, companies, limited companies sometimes run their accounts, November to November, which was in my case. But it's very apparent when I'm out networking or speaking to the members in this community that a common problem persists, and that is I've been burned with my tax bill, and I wasn't expecting that amount. I've not had my tax submission submitted, but I've paid the amount, or I've actually not even done my taxes yet, Zoe, because the ultimate kind of imposter syndrome sits in, and the fear sits in when we don't submit because potentially we don't have enough money at the end of the year to pay for that bill. But trust me, guys, you need to speak to a professional, someone like Lindsay, that can help you demystify, add flesh to the bones, as Lindsay kindly described it in that short introduction, and just plan better, because when we're talking about the topic of money mindset and finances and planning for the month of April, they very much go hand in hand, and a lot of the money mindset stuff impacts the problems we receive through accountancy for our businesses. So I'm not an accountant, I can't advise you on that topic, but Lindsay very much can, and the experts that we've had in the community over the past 2 to 3 years now. So what we're going to do is share a short presentation for this month's webinar, and we're going to ask the expert, and Lindsay's going to take us through that, and then any common questions we get, Lindsay is going to be available. We can set up appointments with Lindsay, and she'll share more about how you can contact her at the end if you need to. So let's get to the presentation without further ado, and let's see how Lindsay can best help you at this time in your business. So can everybody see the presentation? Lindsay, can you see that as well?
I can, yeah.
Amazing. So without further ado, Lindsay, this is obviously about, year-end preparations, because you may be thinking, well, why am I talking about year-end in April, Zoe? But trust me, you need to be thinking about it. So, Lindsay, take it away with your insights.
Yeah. So when I first did this presentation, it was actually done as a year-end one. So it was done in a November period, which is where the treats come from, because it was done as a Halloween presentation. But as Zoe says, it does actually transfer across the entire tax year. So even though for a lot of businesses now starting in April, it's the new year, we do still have to have a mind of next batch, next April. So as accountants, we do work across 3 tax years at a time. because we need that length and breadth of coverage to know whether the previous year has been reported properly. Obviously, we need to know that this year is going to be reported right and on time, but we do need that forward planning as well to see if there is anything long-term that we can do and make use of those tax efficiencies. So as we're going across, as you do with all your other business planning, with your marketing strategies, you always have quarter one, quarter two, quarter three, and then the roundup in mind. Accounting is no different. And if you do your accounting along the same sort of lines as your business plan, as your marketing, you know where the budget is there as well. So you can see whether you can actually do that big push at a particular month, or whether you need to wait until you've had a bit of revenue come in, and then you can start maybe looking and pushing the next time. So that does actually dictate a lot of your strategy for other things as well. And it's the numbers that tend to fall down on that. So you plan all this big marketing strategy, I'm going to launch all these new products, and you think, I can't pay for that to go out. I've no money coming in.
Yeah.
So again, it does put a little bit of flesh against that. So are you moving the slides along, Zoe, or am I doing them?
Yeah, I will do. But that's just an important thing to remember, guys, is, you know, a lot of people treat accounts separately to the business and get a shock at the end because they haven't really considered it until the end of the tax year. So what Lindsay is sharing here is really important, that with your marketing strategy and your business strategy, obviously, which is the core fundamentals of what we talk about, but if we're not considering the financial impact of that, you know, the bigger picture, you know, it can really trip us up. So this may be something, you know, you can review weekly, monthly. I mean, Lindsay, before we go on to the next slide, is there a recommendation from you as the expert of how often a business owner should be looking at their accounts?
It does depend really on, you know, what sort of capacity they've got. I mean, if they're happy with the way things are running, then they'll probably not even think about it because they know they've got a set income, they know it covers everything, and they're quite comfortable. So startup businesses, I would tend to say monthly is probably sufficient, if not fortnightly, just so you can keep a check on that money coming through. You know that the income is going to be there. You know your household bills is going to be covered, because for a startup business, that is one of the main things. You know, you've lost that security of a paycheck at the end of the month, so you need to know from a confidence point of view that that money is going to come through. So the more you look at the numbers, the more you get used to them, the easier everything else along the lines, further down the lines come. For the bigger businesses, they will generally be looking quarterly anyway, because they will probably be VAT registered. So at least, even if they don't look at those numbers, they will be told by their accountant, this is your income, these are your expenses, that's your VAT bill, get it paid. So even if they're not thinking in depth about those numbers, they're getting that regular touch point, so they know, oh, I've earned that much, or I've paid that much out. But even after that point, they should be looking deeper into those numbers and looking at those breakdowns. Look how much is outstanding debt-wise. You can't do that just off a VAT return. You need to look a little bit more in depth on that. So the more regular you do it, the less of a chore it becomes, the more demystified it gets, and the easier it comes then to planning.
Amazing. Thank you very much. So let's talk about planning.
Right. So the planning side of it, the next slide that is in there is looking at a little bit of a strategy side. So it's looking at whether the structure of the business is actually right for you. So this again comes into the planning side. It's not just looking at now what you're wanting to do, it's looking at long-term planning for the business. So is the structure going to be right? Is the sole trader set up, just you running your business, taking your income, the right structure? Or do you need a partnership? Do you need to bring someone else in at a higher level? Or are you wanting a limited company structure? So this sort of consideration tends to come at the beginning of setting up an enterprise of some description. But you can actually revisit that consideration through the life of a business or a company as well, because your circumstances may change. So the structure itself may then change. So you can run along as you are quite merrily, but eventually that is going to run out at some point. So something is going to need to be done with that. So even just looking at the numbers is not enough. The structure is something that needs to be borne in mind as well.
100% agree. We've had experience of this before, where we were, you know, wrongly advised, in my opinion, at the start of, you know, our business journey, and we weren't considering the structure of the business, and we went limited when we really didn't need to. You know, this tripped us up a lot in business, and as we always openly share in the hub community, you know, I wish I would have had this type of advice before, I made them decisions. So it is definitely 100% worth it, guys, considering your structure and considering your growth and, your strategy, and that your financial, bearings and, the things that your accountant is setting you up for match that, because, you don't want to be tripped up like I was. So 100% worth considering. Does your growth strategy meet your financial strategy as well? So how would they best prepare for that, Lindsay, with the points that you've mentioned here today?
So from a financial point of view, it's thinking that long-term view. What are you wanting to do with the business at the end of it? So you've worked all the way through your life, you've got to the end, you're at retirement, you've got good pensions. What do you do next? Mm-hmm. So from a limited perspective, you've got an asset there. It is an asset. You can put a financial value to it. Potentially you could sell it, you could pass it on, you can sell the shares in that business to friends, family, employees at that stage, or you can wind it up. All of these things come with costs, which is obviously where the planning comes in. You've got to factor those into the equation as well. As a sole trader business, you may still have an asset that could be sold. So you might have built up a really, really good reputation. You've got a good, strong client base. It may be something that you can pass on, or you can just, tell HMRC, I don't want it anymore, thank you, and off you go into the sunset.
Yeah.
But year by year, obviously, this is probably not something that's going to be in the forefront of your mind. So it is just a case of looking for those short-term goals. So you're thinking, right, I've got an holiday coming up. Do I need to repair my roof? Am I going to put a garage up? Do I need to swap my car? These are the things generally that us workers, if you like, do have to bear in mind. And we plan for them. We naturally do, because we know they're big expenses. But you can gear your working environment up and your numbers in your business to help you with those purchases as well.
Yeah. 100%. And this is the reason why it's so important, guys. So with what we share on screen with Lindsay about, the profit and loss, the forecasting it forward, you have to prepare and you have to plan. I mean, I remember, for example, when I got my first property, my sister-in-law is head of accountant within the NHS, and she said, always have a cushion, because it covers you for every eventuality. So if you're listening to this, do you have a cushion? And if not, I mean, some people call it a burn. Mine now is a 3 to 6 month burn, because I always want to make sure that, I'm forward planning. And that's how we can best prepare. And, looking at these top tips with your profit and loss and planning for the next 6 months ahead is really going to help you out, to review that surplus in line, with what Lindsay's just shared there about business and life. You wouldn't potentially go and get a house without a cushion. I know I wouldn't. So if a boiler breaks, for example, I've got money there to, fix that boiler. If the car breaks, I've got money there to fix the car. Do you have money there, to fix the business? And are you really preparing for that forecasting and planning forward? Because, a lot of people that I speak to in business, I think if they're honest with themselves, don't. So 100%, these 4 key takeaways here are really going to help you plan for that next financial year, that we're in, with month 1 being, April, that we're in today. So what do you mean by treats, Lindsay, with this presentation? I know you shared it within November, but how can you help them maximize their expenses and, get the best out of planning ahead?
So the treats concept came from a limited company structure. So within a limited company, there are certain little tips and treats that you can kind of tap into that are tax-free. They're tax efficient for the business, and they're just little perks that you can give back to yourself and also to your shareholders, directors and staff. So there are things like making sure you're getting accreditation for using your home as an office, for example. There is a set amount that the revenue sets every year. They did an uplift during COVID, which they've left in place, which is quite nice. So everybody that has a business or has a company can use that allowance. It's quite legitimate to be able to do it. It just gives you a little bit back in your pocket, brings the corporation tax bill down, and doesn't cost you anything personally. So it's not something that needs declaring on payroll or benefit in kind or anything like that for those that are used to the company structures. There are also things like trivial benefits for a limited company. So everyone that is director shareholder employee within that business has access to trivial benefits. So the company can give you a non-bonus, non-reward related lump sum in the form of a voucher. So it can't be cash, so you can't go to post office and draw your money out, or to bank ATM or anything like that. It's got to be a voucher of some description, up to £50 per time, and we get up to £300 a year with that.
Yeah.
So thinking again from a planning perspective, Christmas is coming up, kids want the Christmas presents. You'll draw that money out in vouchers as a director and shareholder of your business. If you've got husband and wife businesses, that's £600 you've got. That is tax efficient. It brings the corporation tax down. It doesn't need declaring. So there are quite a lot of those little hints and tips and tricks depending on the company structure and the business structure that are available. So that is definitely something to speak to your accountant about. It's all on the government website, but it's a nightmare to navigate. So asking your advisor will be a much quicker way of doing that, saying, can I do this or not? And we can give you that answer.
Definitely. And that's the reason I asked Lindsay to keep kind of the treats in, because, you know, I'll always say, and I drum home all the time, if your business isn't giving you what you want, ultimately, what's the point? It comes back to the why, but ultimately it comes back to what you want out of the business, you know, how this benefits you, how that benefits those that you love that are around you, that support you whilst you're in business. So 100% think about them treats, you know, think about that financial, you know, forecasting when you are planning ahead, you know, within the hub community, because if you aren't considering, you know, that maybe you should be, and seeking advice from Lindsay or, you know, your own accountant or accountants that have been spotlighted in the past, you know, to gain that insider knowledge and really make sure the business is working for you rather than against you. So as a summary, what would you say the key takeaways are for anyone, you know, watching this back on playback, Lindsay, for their business today?
So I would say, if it's not something they've thought of for a while, definitely review the structure and make sure it is doing what they want. It matches their long-term goals, their family goals. Have a look at those numbers. Don't be scared at them. You know, write them down, scribble things on them, speak to your accountant and get a little bit more information on there. Make sure you're maximising all the expenditure and the efficiencies that are there. So the treats and that I've just spoke about, they are just a very, very small part of what you can do with the business as far as maximising. Make sure that your income is stable. And if you do have a good month, treat yourself, definitely, but do put some away for those leaner times, because every business experiences them. Yeah. And if you're not sure about all that information, it is a lot to take into account, especially if you've not thought in that sort of detail before. Give me a call. I'm quite happy. I do consultations with people. So if you're not sure, if you do want just a little bit more of an explanation, then I'm quite happy to go through it. But yeah, look at your numbers, think what you're wanting to do with the business, and make sure you're maximising the essentials that are out there.
Definitely. And like Lindsay said, when she first delivered this presentation, this was towards the back end of last year, and she shares here the question, have you started planning yet? And obviously there were 4 months to go, guys, when she first shared this presentation, but there's 11 months to go until the next submission. You know, it doesn't matter how long there is to go, it's about actually acting on that now and planning ahead for a better future, so you're not feeling next year you're being burned by that, you know, bill from the tax man, you know, and your forward planning, and really taking all these key takeaways into consideration to help basically your business grow successfully. So Lindsay's details are on screen, but just to reiterate, if you're listening back to this through audio, do contact her through 07977 572 890 or email info@lwabs.co.uk, or you can contact her through her website. But I really appreciate your time that you've taken, Lindsay, this morning to share your insight and your knowledge with everybody, you know, that is here today, that's watching on playback. The one question that I have got for you from that presentation, which a few people may, you know, need the answers to, because not everyone's structure is the same. You mentioned that there is 3 tax year, you know, tax submissions per year. What are they, you know, just so people have that clarity in their mind, because they may potentially not be set up correctly. And I've had that experience. So if you can just share a bit more insight on that before we wrap up this month's webinar.
Yeah, that's fine. So as I say, as accountants, we tend to run over 3 tax years. So we're always looking at the historic numbers for the previous year that's finished. So that is where we would go back to a client and just really drill down on that income and expenditure and make sure we're maximising everything that we possibly can. We're working in the current year, so the one that is ongoing now that we're in live living. Again, to make sure that we've got that idea going forward, what people are wanting to do, so that we can put systems in place and we can maximize that tax year as much as possible. Again, making sure we get as much money out of the business as efficiently as possible, and we're giving HMRC the least amount legally possible. We're also looking forward, planning to the next year. So if there's something that's shifting, and for example, a husband and wife could have a company between them, it doesn't really matter so much the structure, but they might be planning on having a family. So at some point, one or both are going to be out of work. So with potential for a revenue drop there, a reshift on working practices and all that sort of thing. So if we can gear the current year up to plan for that leaner time, we can hopefully streamline that lull a little bit in that capacity. But just one thing I will mention, Zoe, for this current year that we're in now, anyone who is registered self-employed, so sole traders I'm speaking about here, their tax year could potentially be changing, and that is being mandated by HMRC, what we call the basis period. So that is your reporting period. The 12-month working year that you work towards is going to be altering. So if you've not had a conversation with your accountant as to whether that affects you, you need that conversation this year, because you could be hit with quite a high bill and not be prepared for it through no fault of anybody's, not even your accountant's fault. But you do need to plan for that, because it could hurt quite a few people. Your tax year for this reporting could be a lot more than 12 months. It could be nearly 23 months. So obviously you've got 2 years to report in one there. So you do need that conversation so that you can plan for that tax bill. And the earlier you do it, the better.
Definitely. And I've learned something new, guys, because I didn't even know that. So full of golden nuggets, as always. Thank you very much. So members, that brings our episode 31 to a close. As you know, webinars are only available to our experts and paid members within the Hub community. So if you do know of anyone else who would require Lindsay's support, by all means, you can introduce through that email that we have shared earlier, or you can contact me directly, because I do know accounts are spoken about, you know, probably on a regular basis within our network and our communities outside of this network. So by all means, do put people in touch with Lindsay if it's not yourself, but someone you know that needs her support. But as always, guys, you can invite people to this community for as little as £75 per month. So if you really do want to help grow other people's network and businesses within this community as well, do put us in touch. It is hello@askzoe.co.uk, or head to our website under services, under the Hub, and you'll find all the information there if you wish to share it. And thanks again, Lindsay. I really appreciate it. And that is your webinar 31 as a wrap. Thank you very much.
Thank you.